So it's the perfect storm. The ones going out of business are the ones who don't have a good risk posture and don't have the ability to transfer risk just to an insurance company when they get breached. And it can be catastrophic.
Get excited. Today we're talking about cyber liability insurance, and we're going to make it fun. Everything you need to know before purchasing or renewing cyber insurance, plus how to avoid the common pitfalls that could result in your claim being denied. All you need to know coming up. Let's dive in. Hey guys, welcome back. Today we're talking about risk and what we can do with risk. Every day we're making decisions about how to handle risk. What can we do with it? Can we avoid it altogether? Can we retain that risk and assume some of that? Reduce it, share it, or even transfer it? And that last option, transferring risk, is where cyber liability insurance comes in. It's not a magic bullet. It definitely will not stop a breach from occurring, but it can save your business if things were to get sideways. So today, I'm excited to have a special guest known by his clients as the Fixer. Now, I know what you're thinking. It sounds like the guy that shows up in the action movie and makes the problems disappear. And I don't know if Rusty's trained in martial arts or if he carries a burner phone, but I do know that he has spent over 20 years helping companies navigate and make sense of risk and compliance. He's co-authored 2 Amazon bestsellers on the topic of compliance and risk, and he advises major companies on tech decisions, works with leadership teams to help simplify and handle risk. So it's my pleasure to welcome to our show today, Rusty Goodwin. Rusty, welcome.
Thanks, Ray. Thanks for always good to be with you, but thanks especially for today. This is going to be nice.
Awesome. So, well, I'm glad you're here.
To be with you.
We have a lot to unpack, so let's just dive right in and start with, what is cyber liability insurance?
Well, let me address my name here, the Fixer, my moniker that you've so graciously bestowed on me. Right? Einstein said, "Smart people fix problems. Geniuses prevent them from happening in the first place." And so, the kind of fixer I want to be is that genius type that prevents the problem from happening to begin with, so there is no mess to clean up. So I need to come up with a better moniker, maybe.
It's a good pickup line if you're at a bar or something. I don't know.
I'm the fixer, yeah. So cyber liability insurance is just a tool like any other insurance policy that you buy. You buy auto insurance for your car, home insurance for your home, business owners insurance for your organizations. But there's this special niche, and I actually put cyber liability up there in what we call the executive risk type category. So you've heard of directors and officers, you've heard of fiduciary and crime, you've heard of, in the medical field, malpractice, right?
Yeah.
Rafe, in your all's field, you super nerds, you guys get techie and O, right? For those of us who have business, though, where we're not doing all the nerd stuff, we need protection in case something happens in our networks, in our software, in our hardware, and in our organizations, where we might get a breach that harms us, or a breach that we get harms our customer. And so that's what cyber liability insurance is for, to make ourselves whole again, or make our customers whole again, if a bad actor is able to get into our systems or get into our organization and cause us harm. So it's just another weapon we have to transfer risk. And I really like that you mentioned other risk management tools besides insurance, because transferring that risk to an insurance company it should be your last defense, because it's always the most expensive, always the most disruptive. So I really encourage people to kind of make note of what Rafe said. Let's see what risk we can avoid. Then when we have that, be a very short list, right? There's not too many risks you can avoid totally, unless you just don't open your business. But right. Make that list of risks that, hey, by nature of me being in business, what risk do I have to accept? And then once you have that list made, all right, so of this big list of things that we have to accept, what human behaviors and technology safeguards and administrative safeguards can we put in to reduce those risks? And then when it comes to hell in a handbasket time, where everything just goes down the commode, now we have this insurance as the last stopgap. But you're right. Too many people depend only on the tool of insurance. And even though it sounds counterintuitive for an insurance expert to say this, we want you to spend as little money as you can on insurance, because money is better spent on preventing those things, being ingenious, preventing those problems from happening in the first place, rather than being reactive by having to file a claim. So,
Rusty, what you just described, interestingly enough, is what to me sounds like a good cyber resilience plan, with insurance
yes,
being a piece of that. So I get asked,
yes. And
go ahead. Yeah.
no, you go right
Well,
ahead.
I get asked about cyber liability all the time now. It seems to be on everyone's mind. I think they're waking up to the fact that everyone's a target, and
Yeah.
you know, and being in the cybersecurity business, we hate to say it, but it's not a matter of if, but when, in a lot of cases. So people are waking up to this. That's good. Let's talk
Yeah.
about the kind of things that this insurance can cover. For example, the cost of responding or remediating or legal and
Yeah,
come along with that.
that's a great point to bring up, because a lot of people that I talk to really have no idea what they're buying when they buy cyber liability insurance. They think I'm protected if somebody hacks me, but there's a lot of there are a lot of line items or coverage parts in those policies that ought to matter to you. So, the most popular word out there now is ransomware. So cyber liability
Mm,
can help make you whole again if you get held hostage through ransomware. It can also uh, provide money for your hardware. If I don't know how many of you are familiar with the term bricking, but it mainly means a bad actor just hacks in and destroys your hardware, right? It makes it turns it into a doorstop and not a computer anymore. It can protect you from just the theft and resale of your data on the dark web. Some people just take your data and sell it. They don't care about holding it ransom. They're hoping that you never notice that they stole it. And they're
mhm.
just selling it off to other people, and you're there fat, dumb, and happy, thinking you've never been hacked. It can protect you. Now, when you find out you've been hacked, this is a very expensive part of recovering from a breach. When you've been hacked and someone steals your data, depending on the size of your organization and how many names got taken, there can be certain response and reporting requirements that you have.
Oh yeah.
Like, you've gotten the letters before from Target and Citibank and all the ones that have, are, and the big, the Solar Winds hack and the Colonial Pipeline and the Change Health,
Right.
and so you've gotten the legal notices from the lawyers, from the companies. Your name may or may not have been in a batch. We don't know what data was sold, and then sometimes that includes the company that got breached having to do things like buy LifeLock for a year for everybody who got breached.
Yes.
Well, that can the average cost per name is about $185,
Ooh.
and if you're medical, you could add another $50 onto that per name.
Mm.
So think about that. If you got 10,000 names in your database, let's keep the math simple, and it's $200 a crack. That's a big check.
That's a lot of zeros on the end of that.
Yeah.
Yeah.
Yeah. So somebody ought to have some insurance to help pay for that. And so there are a lot of things that people aren't even aware of that you start having to write checks for when you get a breach, that transferring that risk to a carrier can oftentimes just save your business. And there's also things in there that they can help you recover from bad public relations. There are forensic costs. There are loss of income. If being shut down every day costs you $10,000, inside a cyber policy is business interruption coverage, so that you don't lose that revenue. So there's a lot of important parts in there. Um, they just think, well, it's not going to be expensive if somebody hacks my email. Well,
Yeah.
yeah, yes, it is.
Yes.
Sorry to tell you, but
Well,
it's going to be.
I mean, I'm glad you mentioned those, because I feel like people, although I just said they're coming out of it finally, but I think traditionally people have thought of a data breach or a ransomware attack as just an IT problem. Like, it's just, computers, IT people are going to come in and fix that, and we're going to put everything back together and keep going. But, some of the things you mentioned, like um, compliance violations and regulatory fines, and then even lawsuits resulting from this, it is definitely
Yeah,
more than an IT problem. So the good news is a properly constructed insurance policy can help cover a lot of these things and save your business, because it is way more than just an IT problem.
Well, I kind of wish it were just an IT problem, because the fact of the matter is we spend a ton of money on IT to protect. We spend a quarter of a trillion, like $260 billion annually
Yeah.
on hardware and software to protect our data. But 95+% of all the breaches are caused by just a human being clicking on something they shouldn't click on.
Yeah.
Right. If it was strictly fell on IT, we would hardly have any breaches, but it's the crash test dummies like me that keep clicking on stuff that they shouldn't,
Well,
you know.
that's where
So it
training
really
comes
is
in. Training.
yeah. Well, and you mentioned cyber resilience, and it really is a pretty brilliant statement, because even now, when you want to buy cyber liability insurance, and you want to be able to transfer that risk,
Hmm.
they want to know what your cyber posture looks like. They want to know if you're using multi-factor authentication. The carriers want to know if you're having any kind of password management, if you do cybersecurity awareness training, if you do phishing simulation training. Basically,
Hmm.
do you have your human beings under control? And in case if you don't have your human beings under control, do you back up everything? Do you patch your viruses? They want to know all these things, because think about it. If you're buying a $2 million cyber liability policy, you just had a company agree to write a $2 million check for you if the worst happens.
Hmm.
They want some conditions on that.
Yeah.
They're not going to just go, yeah, go behave however you want. We'll write the
Well,
check.
you just
No, they want to know.
you just blew through 2 million in your last example. I mean,
Yeah, you sure did. Yeah,
2 million is
sure did.
probably not enough. For sure. Hey, let's cover some common misconceptions. And if I had $1 for every time I heard this, I'd have $100. We're too small to matter. Nobody's interested in my data or my customer client list. And I've shared with you before. My response was, you're too small to be on the news. But
That's exactly right. I mean, everyone's been breached. I spoke at a thing a couple of years ago, and the FBI agent Eric O'Neill, he's the one who caught that Robert Hansen spy
Mhm.
years ago.
Yeah,
He's an expert in cybersecurity, and he said it used to be there's two kinds of businesses: those who've been hacked and those who haven't. Now it's those who've been hacked and those who've been hacked again. And he said, and the third one is those who've been hacked and don't know it.
don't know it.
So we've all been. I mean, let's face it: if some 16-year-old Ukrainian kid can hack the Pentagon, then anybody can get hacked. But the other thing, you said something. A lot of people say this to me too, Rafe, is nobody wants my data. And you know what? That person is 100% right. They don't want your data. Nobody wants your ugly kindergarten kid when they kidnap him either, but they know that you do. And so they know you want your data. They don't give a crap about your data,
That's
but they
right.
know that you do. And they know that you'll pay a pretty penny to get that data back.
Exactly.
And so in one way they are technically true, but what they tell me in that point when they try to make it is they have no idea how valuable their data is even to them, or they'd be protecting
Yeah.
it more.
Yeah.
You know.
Great point. I mean, like you said, it may not be something anyone else wants, but they know you want it.
And your kindergarten might be cute too. They're not all ugly. Hey,
I had visions
I
of
just had a
dropping my kid
I
off.
just had a grandson, by the way, and he's handsome. So
That's right.
I got to start
Congrats.
referring to all the kids. Yeah,
Congrats.
man. He's almost 3 weeks old almost. So that's
Yeah.
great.
I was picturing the car pickup line at school when you said that.
Yeah.
Uh,
Yeah. But yeah, so your data does matter to you. And even more importantly, your data matters to the customers, those people that are your data. It matters to them,
Absolutely.
because and they're going to think a lot less of you if you allow their data to escape or get stolen.
Great points. Great points. Something else
Yeah.
I hear is, well, it hasn't happened to me yet, so it probably never will. Thinking that.
Well, number one, it has. You just don't know it.
Yeah.
Number two, it hasn't happened bad enough where you felt the pain from it. But let's just say that person is right, and they've never been hacked. That's like saying, I'm not going to wear my seatbelt anymore or get the brakes fixed on my car because I've never had a wreck.
Good point. That's it.
Well, all right.
Yeah. Excellent analogy.
It sounds kind of dumb when you put it that way, doesn't it? Like, I'm going to stop having car insurance because I've never had a wreck. Oh, okay. Go see how that works out for you.
Yeah. Yeah.
You don't buy something because you have or haven't had it. You want that protecting for if and when it happens. And I'll tell you what, hacks are a lot more common than car wrecks.
Oh, for sure. For sure. You shared some stats with me. I'm just going to read off a couple of these.
Okay.
43% of cyber attacks are aimed at small businesses.
Yes.
75% of US small businesses have reported some kind of attack. And then 60% of SMBs who get breached are out of business within 6 months. Let's talk about why they're out of business in 6 months, because that sounds like that's a scary statistic, but I think it needs to come with an explanation. Like, well, okay, they got hacked or breached. Why are they out of business? And I think
So let me give you two more stats and it'll give all the context you need for that 60% number, right? So 68% of businesses currently don't have cyber liability insurance,
mm,
and 58% of companies don't practice good cyber hygiene. Isn't it funny how those are almost right around that
those are
60%? So
scary.
it's the perfect storm.
Yeah.
The ones going out of business are the ones who don't have a good risk posture and don't have the ability to transfer risk to an insurance company when they get breached.
Mm.
And it can be catastrophic,
Well, that
right?
explains why they're out of business. They don't have
Yeah.
insurance to fall back on.
Yeah.
So
Now, for me in my business, though, seeing that 68% that don't have cyber liability, it could be discouraging because you're thinking, well, man, these people you know, are really blowing out in the wind there if something happens. But for me, it's just, hey, it's guys like you and me who have a lot more. There's a big universe out there that doesn't know what they're doing yet, and we need to go help them, and we need to go get them.
yeah,
So it's I don't want to say opportunity, but it is. It's an opportunity to solve a lot of problems.
that,
A lot of times, problems people don't even know they have yet.
yeah.
So
That's roughly half. That's a lot of people left to help
yeah,
try to educate for sure.
yeah.
Some other stats you sent me: 27% of cyber liability claims were denied or had reduced payouts. Now, what are the main reasons for that?
Yeah, and thankfully that's really come down a lot. A few years ago, it was even higher than that. But but believe it or not, insurance companies don't want you to go out of business. They want to pay the claims if it's going to help you be made whole. But what they can't do is take in $1 of premium and spend $2 in claims, right? So they've got to make sure that they don't go out of business, helping you not go out of business. So part of the reason why that number has come down is they've made the applications a lot stricter. So and the reason why a claim would not get paid, let's not talk about cyber for a minute. Let's talk about homeowners insurance. So let's say that I'm getting a homeowners policy with Erie, and everybody knows Erie. I'm going to insure my house through Erie, and they tell me, and I'm making up these numbers, right? Hey, Rusty, your premium is $1,000 a year, and I'm like, hey, if I put in a security system,
Mm-hmm.
will you make that premium $900 a year instead? And they go, sure, we sure will. And I signed the dotted line. I paid my $900, and I never put in a security system. What do you think is going to happen if somebody breaks in and steals and I go to file a claim?
They're gonna want to see.
They're going to ask me if I have a security system,
Yeah,
right?
right.
So
Exactly.
they're asking you to make promises on your application before they're going to be willing to sell you that policy. So back in the digital world, hey, do you use multi-factor authentication? Are you have any kind of password management? Do you back up? Are those backups encrypted? Like, and Rafe, you've seen the applications; they've grown by 5 or 6 times as long as they used to be,
Yeah, it's a bit.
because they want to make sure that you take cyber risk seriously. If they're going to open up their checkbook, they want to make sure you're doing your part. And so when you fill out that application, too often it's just the CEO or the CFO filling that out, and all they care about is saying yes to as many things as they can to get the cheapest premium.
Checking the boxes.
But
Yeah,
but they never check with their in-house IT, right? To make sure that those answers are true. And sometimes they have no idea what they're even saying yes to. They're just
oh yeah.
checking yes, and they are assuming that their IT department is taking care of it. And so you'll say yes to multi-factor authentication. Then you get a breach, and the insurance company finds out, well, you don't have it after all. Well, you didn't tell the truth on the application. So we're either going to underpay this claim or just not pay it at all. And the insurance company has a right to, because when you said yes in that application, that became a warranty or a promise that you've made that you're going to behave this way. And so you've breached your contract. They don't have to pay. So the onus is really on us as business owners to tell the truth in those applications. And before we answer those questions, make sure we know what we're saying yes to. and make sure, our in-house guys or our outsourced MSP, like all your customers, Rafe, they should come to you and say, hey, before I say yes to this, are you guys doing this for me? Now, I know your processes, and I doubt there's a single question on that app they couldn't say yes to, because I know how strict and tight you guys are on your
Right.
processes. But they need to really check with their IT people, their managed service provider, and make sure that those answers are true, because that's going to be the biggest pitfall to not getting your claim paid.
So this just occurred to me. Do you see audits outside of a claim scenario? Just, hey, a random audit. We want to make sure you are doing all the things you said you are on the application, or does it usually take a claim to trigger that?
So it's a little bit of both, more so on the claim side. But what you'll notice now is, and you may have seen this, but just not knowing what it is. A lot of times when you're filling out that application, the insurance company will come back and say, we're going to offer you this policy. Here's the premium. But they have a little thing called some subjectives. Hey,
Hmm.
but before we write this, you have to either show this now or commit, say, in the next 3, 6, 12 months that you will have this in place. And in whatever time frame that lists, you have to be able to show them that you did it, or they won't
Uh,
honor the claim, right? They'll might say, hey,
okay.
we noticed you don't have I'm just making this up, right? You don't have a disaster recovery plan in place. We want to see that. We'll write the policy now, but you have 12 months to show us that you have one. Or this actually happened. There was a big medical center up in Ohio, I think, and just a few years ago. On their application, the question said, have you installed and do you enforce multi-factor authentication? Well, the guy filling out the application said yes. And technically they did, and I don't know if it was Duo or LastPass, or one of these other, a token, whatever it was they were
Mhm.
doing.
Yeah.
They did pay for it, but they had two doctors in this firm that thought they were too important or too busy
Mm.
to hit one more button, and they refused to use it. So the IT department was not allowed to enforce multi-factor authentication on these two doctors.
Never heard that
So this,
before.
listen, man, 75%, it doesn't matter what vertical you're in, 75% of CEOs use software or applications that are not approved by their own IT department. Because they're like, I'm the boss, you can't tell me what to do.
Yeah.
They're the biggest culprits,
Yeah.
right? And so it was a $1.9 million claim that this medical center filed, and Travelers Insurance paid it.
Hmm.
Well, then they came back forensically and started looking at, we want to know how this happened because we got to make sure it doesn't happen again. Well, they found out that they were not enforcing multi-factor authentication. And I believe that it wasn't even one of those two doctors that caused the breach, but because they didn't say what said they would do on the application, Travelers took them to court, got their $1.9 million back, and was able to not pay that claim.
Oh, the entire claim was denied. Yes.
Yes.
Wow.
So, and listen, if you're going to offer to pay $2 million, you'd want some strings attached too, right?
Sure.
Insurance companies get
Sure.
these bad names all the time, but people sign stuff and never read it. They don't know what they're even promising to. Read the contract, and if you can't understand it, get your IT folks or your broker to explain to you exactly what promises you're making before you write that check, because there always are promises you have to make in there. We just don't bother to read them. We care about premium and we care about deductible. We really don't care about anything else.
Wow. So I'm assuming this is like all other insurance, meaning that if you have a claims history, you're probably going to get rated up and looked at with a lot more scrutiny, especially if you're a repeat offender in filing claims. How does that impact premiums and even just being accepted for coverage?
Yeah. So just like any other policy, your claims history is going to matter a lot. And the more claims you have, the more expensive it's going to be. And the thing about multiple claims, and it doesn't matter what kind of a policy you're talking about. If you have 20 car wrecks,
Yeah.
Progressive Insurance is going to know this guy sucks. He doesn't care about driving. He doesn't pay attention.
Right.
He has no respect for his own vehicle, let alone anybody else's. He's not a risk worth taking. Or we're going to make that premium so expensive, he'll either turn it down and go to somebody else, or it's worth the money for us.
Yeah.
Well, it's the same with anything. And with cyber, it can be potentially worse, because if you get a breach, depending on how many names in your are in your database or what kind of industry you're in, the reach of that breach could be catastrophic. I mean, think about the supply chain hacks we've seen in the last few years, right? It wasn't just that organization that got hurt, it was thousands of companies
Right.
that all got infected.
Right.
And so they know there's going to be some big checks to write. And the other thing that's going to drive your premium, other than that risk, right, and how you manage that risk, is your revenue. The more money you bring in, the higher that premium is going to be. Uh, like we talked about, the farther that reach of a breach could be, the higher your premium is going to be. Who your vendors and customers are, what kind of relationships you have, that's going to drive premium. How fast you can recover. So it goes back to what you said at the beginning. How resilient are you from a cyber perspective? If you get a breach, can you back up in 8 minutes, 8 hours, 8 days, 8 weeks? How fast you can recover
Yeah.
is going to drive premium. And obviously, the quicker you can get back in place, the cheaper that premium is going to be because, like we talked about, every cyber policy has business interruption insurance.
Yeah.
And they know the quicker you can get back up and running, the less money they're going to have to pay for
True.
lost revenue.
True. Very true.
So it all matters. It all matters.
Is it so? I know, like auto insurance, for example, as a consumer or purchaser, you've got a record, right? If you've got 10 speeding tickets, you can't just say, well, I'm just going to go to a different insurance company and get it over there. Your record travels with you. And is that the same with cyber insurance?
Well, I mean, they're going to ask you if you've had claims in the past, and you need to be honest. There's no Carfax, so to speak, for
Yeah, right. No DMV report, right?
but there are some reporting houses that But if I'm filling out an application and they ask me point blank, have you had any claims in the last 12 months, 24 months, and I say no, I have not, and then I go to file a claim and they find out that I actually have, they can deny my claim. So you just got to be honest.
Yeah.
Um, about it, and you're not totally anonymous, but it's not as simple as like a Carfax or medical. They can look up your medical claims. It's a little bit different. Yeah.
So do you have any, talking about coverages, which I might be getting ahead of ourselves here, but do you have any rules of thumb? Is that the best way to say it? In terms of how to determine how much business interruption insurance you need and how much you should request for, like, even the ransom payment. Are there rules of thumb there, or are there standard offerings now that we've been at this for a few years? What does that look like?
Yeah, for smaller companies, there's kind of a standard form that we can use that's $1 million in coverage, and uh, maybe $250,000 of sublimits for fraud and some things like that. But this is going to sound weird for an insurance guy to say this, but I want people to spend as little money as possible on the insurance premium. So as a business owner, you need to do that mental math and say, how much of this am I willing to fund to myself? Like, could I afford to pay on my own to be shut down for 2 days without having the insurance company help me? Because the less you're going to depend on that insurance company, the cheaper your premium is going to be.
Yeah.
And if you're risk averse and you don't have a history of filing a lot of claims, you might be better off going with a higher deductible. You might be better off, having a waiting period for business interruptions of, say, 2 days or 3 days, or
Right.
versus 8 hours. And that's where you work with your broker and your accountants and say, how much of this could I self-fund, so to speak? Like, before I need help, what risk am I willing to take on myself? Because the more you're willing to bet on yourself, the less your insurance is going to cost. And the carriers love, like, oh, this guy's willing to bet on himself a little bit. He must not be as bad of a risk. If he's willing to have skin in the game, that makes him look better to us, right? And then I'm going to be I don't really mean this, but I kind of do. On the other end of the spectrum, if you're a business and your annual revenue is $10,000, don't even have cyber liability.
Right.
If you get a breach and somebody wants to sue you, just close down shop and tell them to go pound sand and open up across the street the next day under another name. Don't spend any money on it. Right? Just, what are they going to get? You made $10,000.
Yeah.
So, but a good broker will help you decide when not to cover something, and appropriate levels increase that coverage as it's needed. Now, about the most you can get, it used to be we could sell $15 or $20 million of cyber liability in one policy. It's most carriers now will do 3 million. Occasionally you can get somebody to do 5, but I had a client a few months ago that needed $15 million.
Mm.
Well, we had to stack multiple policies together because there wasn't one carrier who was willing to say, "Oh yeah, we'll write a check for 15 million if it comes." So it wasn't even a stack of policies; it was more like a tower of policies
Yeah. Wow.
to get them to 15 million. But that's you know, every business owner needs to look at their business as that golden goose. It's laying them a certain size egg every month, right? So, what is it worth to you to protect that egg that comes to you every month, and what portion of that egg can you afford to spend to finance your own risk? Because financing your own risk is a risk management tool as well. Think about it in health insurance, right? We have deductibles, we have out of pocket,
Yeah.
and we tell the insurance carrier, "Hey, I'm gonna opt for a lower premium because I'm gonna pay this copay, and I'm gonna pay the first 350 of a surgery, or I'm gonna pay $100 a day in the hospital." Because if and it's the same with car insurance, right? If you wanted to buy an insurance policy that paid for oil changes, tire rotations, brake pads, well, you could just buy a new car every year for less money than that premium would be. So we all bet on ourselves a little bit with every insurance policy that we buy. So cyber shouldn't be any different. So the 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 appropriate coverage is really going to be different for every business owner, depending on vertical, depending on the risk, depending on how much money they have in their checkbook, right? Um, and that's how you decide how much of that risk to transfer. But a good broker can help you decide that.
Right. Well, it makes sense. Your example with the goose laying the egg every day, I think that's just based on conversations I've had with clients, prospects, whatever. That business continuity piece and that business interruption piece, I feel like is overlooked, um,
It is.
woefully overlooked because the average downtime for a ransomware attack is 21 days. So imagine not being able to use your computers for 21 days and
Yep.
still serve your client base. Are you going to be able to serve your clients? Are you going to have to send everybody home? Do they still, your employees still expect to get paid? Um, just because, uh, your planning was horrible, then now they can't work. And so now they're not going to get paid. There's just a lot there. If you start looking at per day for 21 days,
Hmm.
how much revenue are we missing out on because we can't open our doors because we can't use our computers? Uh,
Right.
so that to me, if you had to kind of rank coverages within that policy, which ones offer the most bang for the buck, I feel like that one is at the top of the list,
It is,
or maybe second. Yeah,
and if you're working with a broker who has access to a lot of carriers, um, they can help you find carriers that, and obviously you'll pay more, but you can up that business interruption as much as well, to a point, as much as you want. I mean, you're going to pay for it, but again, to my point, if your business is going to be interrupted by 10 grand, don't buy business
yeah,
interruption.
yeah, yeah. But if
But
you're,
if I just had a client last week that a massive organization, just one of their verticals brings in almost $40 million a year, and
yeah,
they had insurance. And this wasn't cyber, this was property insurance, but they had business interruption on this one building of only $8 million. And I said, well, this building generates $40 million a year for you. If this building fell down in an earthquake or blew up, you're not going to build it back in any less than a year, maybe more. Well, 8 million. He's like, oh my gosh, I'm way underinsured, aren't I? I'm like, yeah, yeah,
yeah,
actually,
yeah,
you kind of are, And so we upped it, but that's where you have to work with your CFO, your broker. It really risk management, not just cyber, but also cyber. It really has to be an enterprise wide effort, right?
yeah.
Not just the finance department, not just the IT, not just the C suite, not just the safety people, but it's got to be an enterprise wide effort, or it's just destined to fail. It just will.
Great points. I mean, those examples are definitely, I hope, get people thinking as they're listening to this episode. Just all the pieces that are impacted by a data breach or a ransomware attack, which are often one and the same. We talked about a lot of this stuff, but some other stats you sent me. Uh, Average cost of a data breach, $4.2 million.
Yeah. Now, don't get too sick to your stomach, everybody, because that includes all businesses, right? So that's not just for SMBs. So when you look at an average, right, there's a lot higher, a lot lower, but how much of that 4.2 million would you be willing to lose? What if it was only 400,000? Is that still a bankrupting event for you? Like what if, that's where you have to do that mental math again. So I gotta get I think the median would be a better number to get than the average, because then we know we're on that axis where we lie.
Well, you
But
did send that actually.
oh, that's right. I did.
350,000, the median cost of ransomware. And I don't know if that's the payment or everything else that comes along with a ransomware.
Well, that's the average ransom request, and that really has come down almost by a multiple of 10 in the last few years. The average ransomware used to be about $3.5-4 million, but the problem was most people don't have $3.5-4 million, and most people don't have insurance for that much.
But
And so the bad guys were like, well, wait a minute, we're not getting paid anything. These businesses are just closing down. So they figured out ways, and I guarantee at least half of you listening, there's a bad guy somewhere who's in your QuickBooks account and knows how much money you have. And so the reason that's come down a lot, Rafe, let's just pretend you're getting hacked. They know Rafe has 10 grand in his account. So they're only going to ask for 9 because they know you can pay it.
yeah,
They'd rather get something than nothing. And they were just asking for way too much. So they're getting a lot more success, but a lot smaller numbers, but they're still making money. So the requests have come down because they're looking in spine and know how much money you have, and they're going to ask for just a little bit less so that you can pay it.
I'm sitting here, Rusty, thinking I'm not a hacker, so don't let anybody freak out. But if I were a hacker and I wanted to go at this the smart way, I would hack into the insurance companies that provide this and just make a list of who has the most coverage for ransomware payouts. Those are the ones I'm going to attack first.
Well, that's why you realize almost every contract you'll see, for the most part, ransomware is never the full amount of the aggregate. It's always a sublimit. So if you have $1 million in coverage, the ransomware might be $250,000.
Hey, well, let's unpack that a little bit, because that's a good point. And if you're not savvy in insurance terms, you might not realize that. So break that down again for us.
Yeah, so every insurance policy has a limit, and it's called the aggregate. So you're going to buy $1 million of insurance.
Right. Okay.
But then there are all sorts of things that are covered within that $1 million, like breach response. We talked about that already. Mm-hmm. Like ransomware, like if you get a hack, like bricking. But you need to look at that. I call it the mice type. You need to look at the fine print, because not everything will get you $1 million.
Right.
So wire fraud, right? And here's anything that has to do with the human behavior is never going to get the whole million, because they know that we're stupid and we're the most likely to cause the problem.
Right.
So there's always a sublimit for wire fraud, transfer, or employee theft, things like that. And you'll always notice it's quite a bit less than that $1 million. It's called a sublimit. Hey, we know we're willing to pay $1 million for this breach response, but if you're so dumb that you're going to wire somebody money who doesn't deserve to have it, we're going to give you 200,000, right? Or if all your hardware goes down, we're only going to pay $50,000 towards your hardware. There's always a sublimit, and you need to understand what you're paying for in that policy. Many things will have that whole $1 million, but there's a lot of them that will not, and those are called sublimits, and you need to pay attention to those.
Okay, so you mentioned some terms when we did our bit at our event, and I think those terms were inside or outside the.
Oh yeah.
Help me out there. I'm going from memory.
It's called inside the limit versus outside the limit.
Yeah.
And
yeah.
Let's talk about breach response, since that's something we've already kind of described. We talked about how expensive that could be. Well, let's say that you have $1 million in insurance, and we just did that math, right? How expensive breach response? Well, really, by the time they pay for breach response, that $1 million is gone. So you don't have enough to replace your computers or pay the ransom or whatever, right? You got nothing. So on a lot of contracts, when I'm able to, I like to write for my customers. I try to get certain line items, and breach response is one of them, outside the limit. So what that means is I do have a policy for $1 million, but then I have another $1 million just for breach response. That's the only thing it can be spent on. So I kind of have $2 million in coverage, but $1 million is specifically and only for breach response.
Okay.
But that way, when I'm responding to that breach, I'm not using up that whole million that's for everything else. So you always want to look for those.
Mm.
And guys, with Chat GPT now and searchable PDFs, just type it inside or outside to see what your contract says. But scan it in,
Right.
and you can do a little dance for joy if you see any of those line items that are outside the limit. That means you have extra money for those items, and they're not sucking up all that million out of your base policy for the other things that you might need to, business interruption and
Yeah.
and hardware and wire fraud and those other things. And if it says inside the limit, that means no matter what it is, everything's coming out of that $1,000,000.
Okay. Gotcha. So that aggregate number applies inside the limit to
Yep.
everything.
Yep.
Gotcha. So
Yep.
those are good points, and definitely things
Yeah.
to look for if you're reviewing a proposed insurance policy. Something else, Rusty, that you mentioned before too, to be on the lookout for is whether this policy is a pay on behalf or a reimbursement policy.
Yeah. And that's kind of exactly what it says, right? So let's just say that you get a ransomware and they want $100,000.
Right.
If your policy says reimbursement, what that carrier is telling you is great. Once you pay the 100,000, we'll pay you back.
Yeah. Okay.
Well, who has 100 grand laying around, right? And then most business owners that I know, and I'm not talking the bigger businesses, but all of us mom and pops, right? These people don't even know how to spell cryptocurrency, let alone how to get any, which is what the ransomware guys want.
Right.
So now you're shut down longer because you got to go to your bank. You got to have them help you figure out how to borrow 100,000 or how to get some crypto. And this whole time you're shut down until you can show receipts to your insurance company to get your money back, right? When it says pay on behalf of, once you file that claim, they handle it. There's no showing receipts. There's no nothing. They just pay it for you. And I think the carriers that do that, frankly, are quite smart because now they've greatly reduced the amount of time you're shut down, and they'll have to pay you less for
Hey, I
business.
was going to say,
I don't know why they all. I don't know why they all don't do it, but they all don't.
I,
But you really want to look for those terms because if your business is a day-to-day business like a restaurant or some kind of retail, being shut down for 2 or 3 extra days could be terrible.
yeah.
And if you're having to go ask for $100,000 or $1 million from the bank, and they'll do it because they know you have an insurance policy, but how much longer are you not making money because you're having to go find some so that you can show receipts to your carrier to get paid back?
Yeah, definitely a
So,
delay if you have to do
yeah.
that. So talk to us about dates, retro dates, also claims made versus the other option there.
Occurrence.
Occurrence, thank you.
Yeah.
And what that
So,
like.
well, we'll talk about claims made versus occurrence first. An occurrence-based policy is like your auto or your home. You get in a wreck, the wreck occurs, you file a claim, you get it paid for, right? You're never going to get in a wreck and not know you're in a wreck until 5 years later.
Right.
Am I right? Right.
Right.
I mean, so you have Progressive, you get in a wreck today, you file a claim today, the claim is paid. It gets paid when the event occurs. Well, the claims made policy is a little bit different. And when you think about cyber liability, or Rafe, like you guys have, techie, right? Think about malpractice insurance. Let's say I go to the doctor. Well, I don't mind this audience knowing. A couple of years ago, I had my gallbladder out, right? Very simple surgery. This did not happen, but let's just pretend. That was 2 years ago. That doctor had XYZ malpractice insurance through a company 2 years ago. He might not have that same company today. But I get sick today, 2 years later, and go to the doctor and find out, oh, he left a pair of scissors inside me.
Junior
and now it's infected. Yeah, all you Seinfeld fans. Yeah, there's a junior mint inside of me. Right. That's funny, man. I have to steal that from you. That's very funny. Well, now I'm going to sue this doctor and make him fix this problem, but he doesn't have the same insurance company he had 2 years ago. So who pays for it? Well, the insurance carrier that he has now, because they pay based on when the claim was made, not on when it occurred.
Okay.
Right? Because you don't always know. Like IBM says right now, it's 279 days before you even know you've been breached. And then it's another 80 days almost to fix it.
Right.
Well, there's a really good chance you're going to be in a new policy year, maybe even with another carrier by the time you know what happened 300 days ago. So that's why we have a policy called a claims made policy. They're going to pay versus when the claim was made instead of when it occurred.
Okay.
Now, There's a reason why I tackled that one first. This is why retroactive dates are important. When you have a claims made policy, you want it to cover as far back in time as you possibly can. Because that retroactive date, let's say that my doctor left a junior mint in me, but his retroactive period was only 1 year.
Okay.
But he operated on me 2 years ago. Well, he's not going to have coverage for that.
Sorry, on which type are we talking about again?
On a claims made.
Claims made.
Because I'm making the claim, but his insurance carrier says, that's fine. We'll do claims made for you, but we're only going to go back 1 year. Anything that happened more than a year ago, we're not going to cover. Well, I got operated on 2 years ago. So now he is stuck paying for all my lawsuit himself with no help from the insurance company.
So versus an occurrence-based policy.
Yeah, versus an occurrence.
Which means
at the time of the event.
Which would have been the 2 years ago or now that you discovered it?
No. So claims made, it doesn't matter when the event occurred, as long as you have far enough back retro. So in your case, Ray, for you guys, all you technology stuff, you'd want your retro to be back to when Genesis 1, when God created the heaven and the earth. Like you'd want it back as far as possible.
Okay.
So that no matter what comes up, you know that insurance company is going to pay. So what a lot of times brokers will do is they'll make that retroactive date very short to keep the premium low.
Limit their risk. Yeah.
To limit their risk, yeah. Right? But they're off the hook for anything that happened more than 1 or 2 years ago. So we want those retroactive dates to go back as far as possible. Now, if you've never had cyber liability insurance before, you can't get a retro date. That's why it's important to get cyber as soon as you can. If this is the first time you've ever had it, your retro date from now till forever is the first time you ever had cyber liability insurance.
Now, why is that? I guess walk me through the reasoning behind that.
Because you've never been insured by anybody before. And there's no track record of claims. There's no track record of cyber posture. There's no track record of premium. Yeah. So you want to get that clock ticking on your cyber liability policy. Now, rarely they'll say, hey, we know you're a virgin group, so to speak. You can buy 1 or 2 years back, but it's typically 100% of that policy premium for every year you want to add.
Okay. That's not
so, but it's not like that. If you've had it for a while, the retroactive date doesn't cost much at all.
So, you said there's companies out there doing both. What is there one that seems to be the dominant or the standard of those two choices?
Well, there are some that'll do anything. I mean, Lloyd's of London insures Kim Kardashian's rear end, right? So, I mean, they'll insure anything if you're willing to pay enough money for it. But at that point, what are you going to pay $1 million in premium to go back 2 years? Like, and I'm being ridiculous. It's like, at some point there's that whole risk reward thing. So you're better off if you have a good cyber risk posture and you've never had any events, start down the cyber liability road. Just have your date of inception as your cyber liability retro date. But then as you go forward, you're always going to point back to that original date. You're going to keep that date as long as you can. So you just get safer and safer as your policy years go on and on and on, so that as claims are made, they can get paid. Gotcha.
Good stuff, man. I feel like, this is insider information here. so good for our viewers. And it just stresses how important it is to have someone that knows what they're doing to help you through this, to navigate these insurance options.
Yeah.
Let's talk about some takeaways from this conversation, because I think we've covered a lot here. Here's what I've written down, and then definitely chime in, Rusty, if I missed something or if you want to add to it. But sounds like number one is know what your policy covers. You need to review that with your insurance agent or someone that knows what they're talking about. Not to put you on the spot, Rusty, but I think you're probably willing to review anyone's with them if they're interested in looking at it with you.
If they're connected to you, yeah. If they're your friend, they're my friend. Yeah, anything I can do to help. That's fine. And just to be clear, I won't try to steal you from your current guy. I mean, unless he's doing a terrible job. Yeah. But a lot of times when I look at these, I'd say things like, "Hey, buy your agent a basket of flowers or a gift card because he's doing a great job." Like,
Oh yeah,
but it's just sometimes it's nice to have a third party take a look, and I'm happy to do that for anybody that's connected with you guys.
awesome.
Yeah,
Well, we appreciate
yeah,
that. I'll put your contact info in the
yeah,
description for
yeah,
this video when it goes up. Um, know your requirements, meaning all the boxes that you're answering yes to on the application. Be able to prove that, I guess, is the
yeah.
takeaway from that.
Documentation, man.
Yeah.
You got to document everything.
That was my next point. Document everything. Um, and then how about testing your defenses? This is something we're a proponent of is, phishing simulations, test your backups and your restoring. I'll tell this quick story, Rusty. I don't think you heard me tell this, but we were onboarding someone. I'm not going to give away any information to help people guess at who it was. I don't even remember myself, but I've been a contact for almost 8 years, and this happened a few years ago. In evaluating the backups as we're onboarding a new client, it was discovered that there were two employees at this business that were taking home tape backups. They were alternating, like, Rusty, you take the tape home today, I'll take it home tomorrow, then it's back to you, and we're taking these backups home every day. And they had done this for like 8 years, and we
Oh
came in
my
and
God.
discovered that the tapes had been blank the whole time.
I, you've never told me that, but I would have bet $1,000 that's what you were going to say.
Yeah, so test your backup and restore.
Yeah,
And more importantly, test the
absolutely,
restore, because if
absolutely.
this restore doesn't work, the backup is no good. And then just update your update your cybersecurity plan.
It's not funny, but
It
it
kind
is
of
funny.
is funny. um,
Uh,
but anything you want to add to that takeaways list?
and listen, I make my living helping people with insurance, so I don't want to belittle or lessen the importance of having it. But the insurance doesn't matter at all if you're not adopting the right safeguards, technically, administratively, your human behaviors. And if you're not willing to focus on those things first with the help by folks like Rafe and Comtech, don't waste a penny on insurance because you're going to fail anyway. And your claim probably underpaid or not paid. First things first. And I'd be the first to tell you, I'd love to be the insurance agent for everybody in the world. But at the same time, we want to write good business.
Sure.
And a good broker doesn't want to bring on a customer who's destined to fail. And if you're not making compliance and governance, appropriate governance, part of your corporate culture, then you need to really rethink how you're doing everything before you spend a dime on insurance. And a good broker will tell you that. We won't just try to get you to sign on the line so we can get commission off you. We want people to have a very healthy cyber risk posture. That way, it's the healthiest form of transfer of risk because your premiums are going to stay low, those renewals aren't going to be volatile, and your claims are actually going to get paid. So focus on that health and resiliency first. Then let's have a great conversation about your insurance. And I know that's probably, Rafe, not what you expected me to say because my whole life is insurance, but we want people to succeed, not fail.
Sure. You
We
want
don't want to be that progressive auto guy who's had 20 wrecks. We don't want you. We 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 want the
you
good guys.
you don't want to be the one finding junior mints inside of people or their
Yeah,
computers or
yeah.
whatever.
I would laugh about that even when I'm having dinner tonight. That was really
That's
funny. I
hilarious.
might have to go get me some junior mints now. I kind of want some.
Well, Rusty, we certainly appreciate you and the partnership with you. You're just a valuable wealth of information for us, and looking forward
We love you guys, man.
to
Always happy to
speaking
help.
with you guys. Thank you so much for being on. We'll get this posted and share with people, and please share it with your network as well. Guys, just again, a big thank you to Rusty Goodwin for being with us today.
And thank you for giving me almost an hour of your life. Appreciate
Sure
it,
thing.
everybody.
Glad to do it.
All right.
All right, guys.
Bye bye.
Thanks for tuning in. We'll see you on the next episode.